Hi everyone, welcome to CL Home Realty. Today we invited our precious guest, Christian. And Christian is a very reputable and very well-known loan officer in Southern California area. Either you are a first-time home buyer or you are a newly licensed real estate agent. Today it's an interview video for Christian to tell you some basic terminology about mortgage and also his best programs. Meanwhile, we will also teach you some important deadline to track in order for the loan to be successfully approved. So the first question, Christian, can you tell the audience what are some very important terminology for the home buyer or real estate agents to know of?
Definitely, yeah, especially when you're going into an escrow, right? What's important terms and deadlines to know of. So first and foremost, when we open escrow, we're going to have the initial loan disclosures. So that's going to include the loan estimate. Once we sign those disclosures, the loan estimate, that starts us in ordering the appraisal, in submitting your loan into underwriting, and the loan estimate allows us to also lock the loan. We can get the rate locked in, and then we'll send out another loan estimate called the locked loan estimate. So then after you sign those loan estimates and the appraisal comes in, typically our appraisals come in within 7 to 10 days, pretty quickly. Same with our initial loan approvals, they come in within 3 to 4 days of opening escrow. So we move really fast on that. Then the closing disclosure goes out once we get the appraisal and the homeowner's insurance. So those are the two big things that we typically need: rate locked, appraisal, and homeowner's insurance. And we can send out the closing disclosure. All of those disclosures are basically estimates so that the home buyer knows what the rate is, what their closing costs are, all of those important pieces of information that they need to know up front before they get to the final.
Exactly, especially it's a 30-year contract of paying a lot of money to a mortgage bank, right? So the first thing we do is we find a house and then we submit the offer, and then when the seller accept our offer and send back the purchase agreement, which means aka offer, and then we will open escrow the next day, and then the buyer will send the earnest money to the escrow, like usually 3%, and that's when the loan officer started to step in. But before that, usually a loan officer will give a pre-approval before we show clients homes, just to make sure they are qualified for a loan. Once the escrow is opened, what's gonna happen is Christian gonna talk to the buyer and get all their information, like a driver license, bank statement, and then fill out a loan application and then submit the loan within like a couple days, right?
Correct. Yeah, during a pre-approval, that's what we like to do up front. We do a really thorough pre-approval where we collect all of their information. Within 24 hours, we typically can turn around a pre-approval. So if you submit all your paperwork, complete the application online, really easy to use application, secure online portal where you can transfer your paperwork. I ask you everything that I need. Once you submit me all that paperwork, within 24 hours, we'll have you pre-approved.
Oh, perfect. So pre-approval, that happens before we open escrow, before we started to show clients homes. And then when we started the loan, after we open an escrow, how many days would you say you will get a conditional approval?
Within 3 to 4 business days is our average turnaround time from the time we open escrow to the time we have the initial underwritten loan approval. A loan originator is like a nurse in the medical world. We're like the nurses, and the doctors are like the underwriters, okay? So we do all the hard work, we change the bedpan, we put together the loan package, and then we send it in to the doctor, the underwriter, to diagnose the loan and make sure that the loan is fully underwritten, everything looks good, they're officially fully approved and underwritten. So it's important that us as nurses do our job well up front, pre-approve them accurately with all their paperwork, and confirm all that information up so that when we get in underwriting, it's an easy process in underwriting because we've already done all the hard work up front.
That's true. So within 3-4 days, you get a next approval. That's more strict approval. That's gonna approved. And then what's the next step? You said approval, right?
The official approval. At the time we submit the loan into underwriting, again, within 24 to 48 hours of opening escrow, we'll typically order the appraisal right away as well. And the appraisal takes about 7 to 10 days at most.
Can you explain what is appraisal?
Good question. Yeah. So an appraisal is basically, they're focused on what the home value is. That's 95% of the appraisal. The other 5% Is there any health and hazard issues with the home? Is there chipped and peeling paint on the eaves? That's a common one. Are there smoke detectors and carbon monoxide detectors? Are there any holes in the walls, exposed wiring? It's not like a home inspection, right? An appraisal is there just mainly for the value and make sure the home's in decent condition.
Yes, so it's livable. So very important, new agents, if you are helping with the appraisal process, make sure to communicate with the other agent to put on smoke detector. Otherwise, the appraisal gonna not go through.
Then what happens is, how much does a smoke detector cost? $30, $40 at most. Now we have to send the appraiser back out there. It costs your client $100 to send the appraiser back out there over a little $30 smoke detector. So it's frustrating. I don't like it when those things happen because it's basically just costing our customers more money over something that could have been prevented.
Yeah, so basically after appraisal, it comes appraisal value. There's a good chance the appraisal gonna be appraised at the home value. There's gonna be no problem. What if it came up shorter?
That's a good point. Right now in this market, a lot of appraisals are coming in at value because the homes came down a little bit, right? They peaked up, 6 months ago or so, and then they came down a little bit in their values. So right now it's not uncommon that appraisals are coming in at value. If they don't come in at value, we have some options depending on, first option obviously is, can we negotiate on the price? Can SIA go in and try and get the price down?
Yeah.
If there's multiple offers on the property, it's very competitive, there's no way we can negotiate the price. That might happen. I feel like that's the market we're heading into. Then the next options are maybe putting less down. If the buyer doesn't want to pay the difference, right, which technically, let's say they're putting down 20%, they only have to pay 80% difference in the appraised value. So that means if the appraisal came in $10,000 less, they only have to pay $8,000 more to still not add mortgage insurance. Another option though is adding mortgage insurance. Because mortgage insurance is so inexpensive these days, it's actually worth it to consider, instead of putting down 20%, put down 18% and add $25, $35 in mortgage insurance.
Can you explain what is mortgage insurance?
Mortgage insurance protects the lender in case the homeowner, the person making the mortgage payments, defaults on the loan. Right? So if the homeowner doesn't make their mortgage payments, the lender can collect on an insurance policy called the mortgage insurance, and they can collect up to 3 mortgage payments on behalf of the buyer.
I see. So when the down payment the buyer put in is less than 20%, there's gonna be a mortgage insurance because the lender want to protect themselves because there's too much money the buyer will borrow, right?
Right. There's an added risk, right? Less than 20%, that's the sweet spot where they see that even if the buyer defaults, they can still go through the foreclosure process and still get the home back and recollect all of their money. If they put less than 20% down, that's where there's more risk. So we need to add in an insurance policy.
And you mentioned it's very cheap. It's cheaper than what is used to be in the past. So
Correct.
It doesn't make a very big difference for the buyer.
It's not a big difference, especially during like the 2020 to 2021, 22 craze when the prices were just, there's 20 offers on one property. That was very common practice to just add in mortgage insurance, keep the loan amount the same. So the buyer didn't have to bring any more money out of pocket, but you just add in a little bit of mortgage insurance to the loan.
Yeah, in case appraisal comes in shorter.
Correct.
Yes. So the next question, after appraisal goes through and then it's got a no problem, we'll remove the appraisal contingency. The next step is to remove the loan contingency. Even you said after 3-4 days, you got a conditional approval. That's not the time to remove that contingency for the loan. You have to get another approval. It is more official for us to remove the loan contingency. Can you explain that terminology?
That's a really good distinction between the two. So initially, the underwriter will give us an initial or conditional loan approval, meaning here are some conditions that we need to address before we fully approve and clear you out of underwriting, and now you can move forward with final loan docs to closing. So the conditions typically are, hey, you have an inquiry on your credit, like what's this credit inquiry from Credit One Bank? Oh, well, I applied for a new credit card and it shows up on my credit report, no new debt was obtained other than what's been reported. So that's a very common condition that comes up on conditional approval. Explanations of deposits, maybe if there's large deposits in their banking account, buyers asked to explain what those deposits were. Now, once we clear those conditions, which we can typically do within 24 to 48 hours, then we get the fully underwritten loan approval. And typically, by the time we get the appraisal back, we're actually moving forward to be cleared out of underwriting. So within 7 to 10 days of opening escrow, by day 10, we pretty much have a clear to close. So not only are we fully underwritten and cleared, we're now actually moving forward with that next step, which is final loan docs.
So that's when we get the final approval, then we can remove the loan contingency.
Correct.
Right?
Yeah. Now you can rest assured knowing my loan is completely done. We love that term, clear to close. Everyone smiles when they hear that because that means I'm done underwriting purgatory. I don't have to worry about the loan. Everything's done. And now we just are moving forward with signing loan docs, transferring the money into escrow, and closing.
So Christian just explained to us, the first step is pre-approval, and then we open escrow, we get a conditional approval, and then maybe at the 17th day, we get final approval. That's when we remove all the contingencies. And after that, we will have something called CD. What that means?
That's a really good one. So the CD, or closing disclosure, there's an initial closing disclosure, and then there's also a CD that you sign with the final loan docs. The initial closing disclosure, basically, it really starts itemizing all of the fees to an exact amount, where, before we were estimating fees maybe a little bit, maybe there was an appraisal reinspection, we had to pay an extra $100. If those fees didn't take place, now we've removed all those extra fees, and now those are a lot more precise and more exact numbers on the closing disclosure. After they've executed and signed the closing disclosure, then we have to wait 3 days before they can sign the final loan documents and close.
Why we have to wait for 3 days?
That's the rules that were put into place during the Dodd-Frank mortgage crisis, right?
It's not decided by you.
Not decided by us. That's the regulations which we fully embrace and fully appreciate, because we want the borrower and the buyers to sign the closing disclosure, then wait 3 days, make sure they're comfortable, not sign it out of being pressured or sign it because they're excited and motivated and then they realize what they did. No, we want them to feel comfortable going into signing the final loan documents. Make sure they fully understand every fee, everything that's on that loan estimate.
Yeah, so buyer will sign the CD, and then after 3 days, then I think there's no issue for the lender to fund the loan, right?
At that point, they can sign loan docs. We can fund same day. We typically fund next day.
So sign the loan doc, and then the buyer go to the bank, wire the rest of the money for the down payment, and then the same day probably, or the next day, the bank gonna issue the mortgage payments, right?
We'll officially fund the loan,
Yeah,
right?
fund the
They
loan.
call it funding.
Yeah.
And then recording is when the title company or escrow,
Record the title.
they
to the
record the
buyer's
title.
name.
Exactly.
And then the buyer can get the key after it's recorded. Then the happy closing happens.
Then we get to pop champagne bottles and have fun.
Yes. So please subscribe to our channel, like this video, and also comment below if you have any questions. We're gonna help you out with any real estate questions or mortgage question. We are working as a team to help as many buyers and sellers as possible. So for the next video, we're gonna talk about some very important loan programs Christian offers, and that's gonna help both sellers and buyers. See
Thank
you
you,
next
Sia.
time.
Thank you.